Southern California, welcome to Money Matters with Dino. Saturdays from noon to 1, right here on Power Players Radio, KTLK AM1150. Do you own a home or have plans to in the future? You'll get all the information you need to know about what's happening in the local real estate market and how to take advantage of that knowledge. How to approach home ownership or mortgage financing with design, vision, and focus, as well as accurate information. Whether you're buying, selling, or investing, listen to Money Matters with Dino right here on Power Players Radio, KTLK AM1150.
Welcome back to Money Matters with Dino on K-Talk AM1150. If you have any questions for me or my guests, or if you need help with your money matters, give us a call at 949-720-1616. That's 949-720-1616, or check us out online at moneymatterswithdino.com. From your estate to real estate, we're here to help. This segment is brought to you by Citywide Home Loans, bringing you low rates, specials on closing costs, and exceptional service. All right, joining us today in our discussion panel with the experts is credit repair expert Corey Goldstein and attorney Keefe Roberts. Today our topic is the secrets to maximizing your portfolio with good credit. All right, welcome to the show, guys. So, Corey, let's start with you. Before we jump into our topic, tell us a little bit about you and your background.
Hi, Dino. Thank you for having me on the show. I'm a Chicago guy, and I've been out in Southern California for about a dozen years.
Chicago guy. Does that mean you're loud and proud?
Yeah, I am, as a matter of fact.
Go Blackhawks.
Yeah, go Blackhawks. Exactly. The difference that I make right now, working in credit and helping people out around the credit and credit score is really something I've been involved with for a number of years. And it really stemmed from my desire to make a difference for people. And I've done a lot of real estate transactions throughout the years. I was a court-appointed receiver a number of years ago back in Chicago. I bought and sold a lot of foreclosed, tax delinquent, and bankrupt properties. And I just got tired of the real estate business, like buying and selling and things like that. But I still wanted to very much participate on the property side.
Sure.
So I jumped in around credit. And I don't think that there's anything more impactful in the area of money than credit.
When I was first introduced to you, you were referred as the Ferrari of credit repair. And I didn't know exactly how to take that, but we have worked together now, and I'm going to take it as Ferrari does 0 to 60 in pretty much nothing, right? They're very quick.
Yeah.
A lot of the credit repair companies that I've worked with, they can take months to get something removed off your credit. You literally, and I still don't know how you do it, and I guess that's why you do what you do, but you have it done in days, which something that would normally take another credit repair company weeks, months, or can't even do it. So it's very impressive. I'm glad you're here on the show today.
Thank you.
And before we get into more, I know you commented on the Victoria's Secrets thing that I talked about earlier.
Right.
Tell us a quick story about Victoria's Secrets and what your experience was.
Okay, well, just to kind of put it in the right context, not that I wear women's clothing. What I say would be is, when you shared about the client that had applied for or went out and bought a Victoria's Secret product and then didn't make a payment and something showed up on the credit report, right? Or the inquiry.
Yeah, it was the inquiry. They happened to go apply for a credit card while in process of buying a home.
Right.
And that inquiry changed their credit score.
Yeah, and those delicate examples, it's so fine-tuned, right? To get the maximum out of your credit score, like the maximum horsepower out of the credit score, you don't want to do anything.
Right.
And in an inquiry, obviously dropped the score 3 or 5 points, which took them out of the deal.
Yep, that's all I needed.
And how much was that transaction?
Yeah, it was like a $600,000 loan.
Right. So a $300 item or an inquiry impacted the credit score, and nobody puts those dots together. So what I did when I shared at the break with you was there are numerous ways to get items removed from a credit report instead of sending a letter to the credit agency. So I'll share something with you and your audience because this is something that people can do themselves that would make a difference and not cost them a penny.
Really?
Yeah, absolutely. So here's the thing. Instead of sending a letter, waiting for the credit bureaus to respond 30 days and then hoping and wishing and praying something falls off the credit report in the middle of a transaction when you don't have the time to wait. What I did for this client was I called somebody in the media department over at Victoria's Secrets, and I described to them what the issue was and that I was a customer of Victoria's Secrets and that I wasn't getting any help whatsoever from customer service. That escalated the issue directly to the Office of the President and CEO, where I then described the issue. Within 24 hours, a letter of deletion removing that 30-day late payment on my client's credit report.
So the media department, I'm assuming they got involved because they don't want any bad media.
Exactly, and this is going to upset them all over the place.
Wow.
Absolutely.
Well, great advice. Secret number one, I guess, right?
Yeah, absolutely. Secret number one.
All right.
Think out of the box.
And our next guest, Attorney Keefe Roberts, returning, was on our show earlier this year. How you doing, Keefe?
Doing great. Thanks for having me again, Dino.
You're welcome. So last time you were here, you were talking about this new venture you were going into. Tell us what's going on with that.
Well, I just recently merged with a nationwide law firm that handles mortgage servicing related law. We call it default servicing. We do foreclosure, bankruptcy, eviction, and litigation work for most of the major banks. We keep real busy.
Yeah, I bet you do. Now, as far as the foreclosures go, is that starting to slow down a little bit? What are you seeing?
Well, it has recently slowed down, and that's only since January 1 when they passed the California Homeowners Bill of Rights. This was an act that sought to curb some of the servicing abuses that were taking place. Many of the listeners probably have been through a loan modification process where they're dealing with multiple people, being told that their documents were lost, getting denied modifications only days before a foreclosure sale, and then losing their house to foreclosure sale. Well, the Homeowner Bill of Rights sought to try to protect consumers from these types of abuses by the servicers. Now, no longer can a servicer continue with a foreclosure sale. It's called dual tracking. That's prevented now. You can't move forward if you are reviewing a homeowner for a modification or other type of workout programs such as a short sale or forbearance. You have a single point of contact now.
Yeah, let me ask you a quick question on that. So is it as simple as, let's say you're down the road of foreclosure, it seems like there's no other hope other than that, and they've expressed that you got less than 30 days and you're being foreclosed on. Is it as simple as going in and applying for a mortgage modification and being able to delay it? Like, do they have to take that modification if you apply?
Oh, that's a good point. It's such a new law that it hasn't been tested yet. But what the statute does say is that if they are in receipt of a complete loan modification application, now what is complete?
Right.
I mean, that's yet to be determined. But it really plays in the favor of the consumer, I believe. I think we're going to see a lot of lawsuits coming out now if the servicers continue with the foreclosure. But you asked me earlier, have I seen a slowdown? Yes, absolutely. Most of these servicers have put a halt to the foreclosures until they can figure out how to comply with this new law.
Don't you love it? Being in the mortgage business, I experienced the same thing a few years ago. All these new laws came out for us, but nobody knew how to interpret them. Like, literally, nobody knew what to do.
Well, and most of the problem is the legislators who are writing these laws don't understand the business. So the law is written so poorly, and that gets corrected with case law and subsequent amendments and the like, but it takes time.
All right, guys. Well, let's just jump right into the questions and get moving here. All right, Corey, how long does it take to change someone's credit score in a significant way?
Well, I'm going to answer that directly and then expand on it. Oftentimes, you can impact a client's credit score in 24 to 48 hours. And how you can do that is by understanding the key issues on that client's credit report. So if you have a client, you're a loan officer, and you're looking to help them get qualified, and you only need maybe 5 or 10 or 20 points, there are aspects on the credit report that you want to really look at and understand, because you can impact those oftentimes within under 24 hours.
That's incredible. And before we get going too much, I'm just going to, in case you just jumped into your car, you're listening to Money Matters with Dino on KEIB AM1150. And we're talking about the secrets to maximizing your portfolio with good credit. And seriously, guys, even if you only have a 10-minute car drive, this is the show you're going to want to sit in your car and listen to the whole time, because the advice that these professionals are giving you today, they normally charge a lot of money for, and it's free. So, and if for whatever reason you can't listen to the whole show, it's going to be online at moneymatterswithdino.com, probably by Monday morning. You can also call us direct at 949-720-1616. I can put you in touch with them directly. All right, next question. How do they calculate credit scores? What's the most important criteria?
Well, it all depends on the type of product that you're going to purchase. So there's a different credit criteria if you're going to be buying, a washing machine on finance.
So that's a good question, actually. I'll have people come to me and say, my credit score is 740. I went and applied for a car. I went and bought a car, and they told me my score was 740. And then I run their credit, and it's significantly less.
Right.
And it's my understanding, correct me if I'm wrong, that a credit report that a car company runs is different than what a mortgage company runs. Is that correct?
That's correct. A whole different FICO matrix, a whole different matrix entirely.
Does that also apply then for like a Capital One credit card? Did they run a different report as well?
I'm not certain on a credit card how they determine aspects of credit. I'm sure it's not a. I'm guessing it's not a FICO product. Although if you're going to go into Sears and buy a washing machine for $2,000, and you're gonna have that aspect to deal with.
Mm-hmm.
I have a question. I've heard, and maybe is it true that if you apply for a credit card such as Capital One, which is considered a subprime credit card,
sure,
is that worse than not having any credit at all? I mean, having a credit line from a poor,
like a second tier creditor,
right? Yeah.
Well, if you it's a great question because there's prime creditors and there's subprime creditors. So if you're going to use Capital One as an example as a subprime creditor, it actually is better to have them on your credit report if you have no credit. Right.
But what if you have poor credit and you're trying to establish good credit again?
Well,
and you apply for a Capital One card, which they litter your mailbox.
Right. They'll give you $500 just for
small line of credit. Yeah.
So if you've gone through something, that's oftentimes the very kind of a credit card that you'll get after bankruptcy discharge.
Right.
Or if your credit scores get under a certain number, it's not a bad thing to get. I'm not a real big believer in applying for new credit. I'm a real big believer in getting old credit that's new on your credit report, right? So I grew up in Chicago, was born in 1963. I have items on my credit report from 1960, 1958, 1959. Now, how in the world?
1963?
And I was born in 1963. So how in the world, just to give you the craziness of the whole story, how does that happen?
Well, is it Goldstein? It's kind of like Smith, isn't it?
Well, it is, but what I did was, that's a concept of an authorized user. Right, so you have somebody that needs a credit boost quickly. Usually, it'll take maybe 9 to 14 days to have your credit score increased by becoming an authorized user. So now, for example, if I have a 1960 credit card from Sears and I loan it to you, Dino, and I put that on your credit report, you get the benefit of all of my years. In this case, of my father's years, because it's my father's credit card.
Yeah.
Right. So you get the benefit of all those years of credit. So imagine what happened to your credit report.
Okay. So again, in the lending business, I've done this many times where I've told the client, you gotta go to your parents or somebody who has good credit, have them put you on as an authorized user. It helps boost your score, and it gives you certain effects on your credit report when the underwriter looks at it. But about a year or so ago, I was told that that's no longer going to help you in a benefit, that they've discovered that people do that, so they've done away with it. Are you saying that that's not true?
That's absolutely not true.
Okay.
They were discussing that for quite a long period of time, and then recognized that 13 to 16% of the people actively buying properties were authorized users, which that would have impacted the real estate market substantially. So 15%, let's say, of people actively looking to purchase and get refinanced or buy a new home would no longer qualify.
Wow. All right. Secret number 2. Go become an authorized user and get yourself better credit. You're listening to Money Matters with Dino on KTalk AM1150. If you have any questions at all about your mortgage, current rates or programs, or you have any questions for our panel of experts here today, give us a call at 949-720-1616. I do want to remind you that I am a mortgage broker, and this is a very complicated market for both buyers and sellers. Therefore, my recommendation is put together a team that really knows the industry, knows your market, and understands your needs. If you need help putting that team together, give me a call at 949-720-1616. That's 949-720-1616, or check us out online at moneymatterswithdino.com. From your estate to real estate, we're here to help you. Stick with us. After the break, we'll continue our panel discussion with the experts. We're going to be talking a little bit more about the secrets to maximizing your portfolio with good credit. In the meantime, think about how you can use this information to protect your investments. And as always, don't just get real estate rich, get rich. Stay with us. We'll be right back.
If you're a business owner or have a high net worth, it's important you have the proper insurance coverages. However, from a financial standpoint, it's even more important to have someone else pay the premiums for you. That's right, it's called insurance premium financing. In short, it means we use a combination of loans and secured assets to fund the payment of your premiums for your life insurance coverage. With this unique program, there's no need to pay expensive annual insurance premiums or estate taxes out of pocket or out of your company's cash flow. Your assets remain intact, protected from creditors, while your family and business receive the security they need. I'll bet you'd like more information. Simply call James Burns at 866-544-8825. That's 866-544-8825. Or go to whitediamondinsurance.com.
Finally, a reputable legal firm. CDA Law Center, a nationally recognized nonprofit homeowner advocate, one of the most trusted firms in the country for helping consumers with their loan modification process. CDA's attorneys have decades of combined experience guiding their clients through the very complex and choppy waters of loan modification. Call 877-499-4435, 877-499-4435. Finally, honest and ethical advice to gain real results. Call CDA Law Center at 877-499-4435. That's 877-499-4435. Or check them out online at cdalawcenter.com.
Mortgage professionals, are you looking for a company that values you as a loan officer? One that can provide you with the tools you need to grow your business at your pace? Then look no further than CHL Mortgage. CHL Mortgage provides you with a full range of residential loan products and services. You'll be backed by an exceptionally trained team of professionals that can take your clients as seriously as you do. Your clients will be treated with dedicated service, personal integrity, and exceptional professionalism. You'll be able to guide them in the right loan with competitive rates and keep them on the road to achieving life's goals. To get started on advancing your career, call Dino with CHL Mortgage at 949-720-1616. That's CHL Mortgage, 949-720-1616.
Welcome back to Money Matters with Dino. If you have any questions for me or my guest, if you need help with your money matters, give me a call at 949-720-1616. That's 949-720-1616. From your estate to real estate, we're here to help. We're in the middle of our panel discussion with the experts, and while we were on our little break, we actually just got into this incredible conversation that I just want to get into right away because we're running out of time, and these two guys are a wealth of knowledge. We're talking about the secrets to maximizing your portfolio with good credit. Corey, if you can answer this question for me, do short sales have less of an impact on your score than foreclosures? I've heard yes, and I've heard no. I've heard on the credit reports, they're exactly the same. Is that true?
It is true. It is true on the credit report. It'll show as repossession in spite of a short sale. The credit agencies have yet to figure out how to properly rate the actual action, a short sale versus a foreclosure, and both can potentially be eliminated.
Keefe, what about you? You obviously work with a lot of the banks. Do you guys view that in a different manner? Obviously one is sold, one is taken. But do you guys ever look into that and before you make a determination of what you do with the client, think at all about the client's credit, or is that not even a factor?
The client's credit is not a factor for the banks. It's really loss mitigation. How much are they going to lose?
Right.
Regardless, whether it's a foreclosure or a short sale, the bank's going to lose money. And they really don't want to foreclose, but it depends on how far along they are in the foreclosure process. If they're very close to completing a foreclosure sale, where is the incentive for them to complete the short sale, right? I mean, with the foreclosure, they wipe out any potential junior liens, judgments, things that may still be on the property. it's a cleaner process. So if you get involved early in the shorts during the foreclosure process, then you have a higher likelihood of getting approved for a short sale. Now, with respect to credit, I have a real estate company that does hundreds of short sales, Esquire Realty Solutions, and I have a consumer law firm that does the negotiations with the bank for the real estate company. Now, I know that they routinely request that the servicer delete the line item from their credit report as part of the negotiations, right? Now, that means that if you pulled your credit after a deletion, it looks as if it never existed, the debt. And therefore, I believe that it is the best credit impact that you could have following a short sale. But that's rare that a servicer, a bank will do that. It really comes down to what authority does the servicer have from the investor, the owner of the loan. These loans are sold in the secondary market. They are then given to the servicer to perform the servicing under what's called a pooling and servicing agreement. And investor guidelines dictate what they can do. Some investor guidelines say that they have full authority. In those cases, sometimes you get lucky, right? That's why you aim high, right? Sure. You get them to delete the credit score, the line item. If the bank tells you that they can't change credit or anything like that, that's a bunch of bull, because it's the easiest thing in the world. It's a hit of a button on a system called eOscar. Now, if most of the time with short sales, what happens is they will report it as paid as settled or paid not in full, right, Corey?
Paid less than agreed.
Less than agreed, right? That's another way. And I'm not real familiar with the details of it. Corey probably knows more. There's some type of code associated with it. I've been told by a friend of mine that worked in the legal department at Experian that FICO score is the best kept secret next to Coca-Cola. So, it's they don't even know, and they're the lawyers that work there. But nonetheless, they will report it most of the time as paid in less than full. Now, when you close on a short sale, I've also been told that the credit, it doesn't stay on your credit. It is a derogatory, paid in less than full, less than agreed. But I heard that it doesn't stay on as long. I don't know that for certain, but I heard it's like 18 months. Do you know?
Well, I haven't seen that go full cycle yet. Right.
Oh, right.
And so, but I do see, for example, if there's a deficiency judgment, or if there's a deficiency in the short sale, leaving a $10,000, $50,000, $100,000 balance. Remember, banks were asking for personal guarantees after that fact. Remember that? Yeah. Now now deficiency judgments are prohibited in California if they foreclose using the non-judicial foreclosure process. It's called the one action rule. They're only limited to the property. They can't take a deficiency. Unlike Illinois and Chicago, exactly, where you can get a deficiency judgment. Right. But in those cases, and also they were trying to, for a while there, make the borrowers in short sales sign a promissory note, which is essentially taking a deficiency. So they outlawed that too a year ago in California. But what really it comes down to, what you said earlier with the Victoria's Secrets story. I'll tell a quick little story here. In my past life, I was general counsel to a very large subprime mortgage lender. I won't mention its name because I have to preserve the attorney-client privilege. But if anybody's listening right now who worked there will know this story. It went to Dateline. And it involved, back in the Wild West days when you had rogue loan officers out there forcing loans down people's throats that they didn't really need and couldn't even afford. In this particular case, we had two elderly folks that were 90 and 92, wheelchair bound, on fixed income, owned their house outright, worked their butts off in Minneapolis, Minnesota, blue collar. They own their house, and that's about it, other than their pensions.
Sure.
So the loan officer got a hold of them, convinced them to take a loan out at a high interest rate that they couldn't afford on a stated income loan. Remember those?
Yeah, oh yeah.
No income, no job, ninja loans. And so they went along with what the loan officer said, and the loan officer typed up something that said that the gentleman had a hobby job that made $20,000 a month building wood birdhouses in his garage, right? Well, guess what?
Horrible.
A big law firm in Minneapolis got a hold of this story. The news agency out there got a hold of this story. It made it all the way to Dateline.
Wow.
Yeah.
Wow.
And you know what we did?
Yeah.
We wrote off the loan. The moral of the story is if you really want to get the bank's attention, make a lot of noise.
Yeah, make a lot of noise.
Yeah.
That's
Which
great. Wow.
I'm glad you brought that up, because that goes back to what Corey was talking about, with Victoria's Secrets at the beginning of the show, and it really is something. I mean, we've heard stories, we've heard all these little things, but Keefe, who's worked with the banks, just verified that they have the power to do anything they want to do. With the touch of a button, they can literally write that entire thing off. Now, maybe they won't write off the entire loan like they did in this situation, which I'm sure was the smartest thing one can do. The only thing smarter would have been to have done it earlier before it got the date line. But making noise, especially to the media, bad publicity is really what it's all about. None of them want that. But so I have a question for you guys, though. That obviously with mortgages, that holds true, and Keefe has just verified that. Does that hold true with all other creditors as well, like car companies, credit cards, all that stuff? Is that really the way to go?
Well, it's just one of many ways to go. We're not a kind of a company that sends letters to the credit agencies, hoping something's going to fall off. Oftentimes we look at the circumstances surrounding it. And what I mean by the circumstances are, for the last 15 months or 15 years, this guy's been making great payments. Sure. Perfect, impeccable. Mm-hmm. And then in this short period of time, he made something happen. He had some life event, lost a job, somebody, God forbid, died, whatever it may be, some life circumstance, and now he's back on track again.
Right.
So we want to isolate the time period before and the time period after this period where we had these problems, and we want to understand it. So understanding that, and so instead of looking at the entire, you want to look at the entire credit profile, but you also want to compartmentalize the specific issues. So by being able to do that, we can oftentimes reverse information that's being reported. And it could be very accurate that he's late. Mm-hmm. But the circumstances surrounding the problem is the key thing to focus on.
If you just jumped into your car, you're listening to Money Matters with Dino on K-Talk AM1150. We can be reached at 949-720-1616. That's 949-720-1616. Keefe, explain to us, and me in fact, not just the listeners, but what is the Fair Credit Reporting Act?
Well, the Fair Credit Reporting Act is a federal act that governs the reporting of credit. Creditors are supposed to, when you finance things, they're supposed to report not only derogatory credit, but good credit too. Another story from my days as a bank attorney for a large subprime lender. They were sued by a class action lawyer out of Chicago. Mm-hmm. Edelman. I don't know if you're familiar with Edelman.
Sure. Yeah, he's probably listening.
Okay, right. So Edelman was a thorn in our side on many issues, but this is how things get recognized. It's the consumer lawyers that bring the class actions, that make the changes.
Who's the guy you guys are talking about?
Edelman. He was
Jeff Edelman.
Jeff Edelman. He's an attorney in Chicago.
Okay.
Yeah.
He does a lot of consumer class action work in various industries, but particularly the mortgage industry. But we were not reporting the good credit. Again, remember, we were a subprime lender. Sure. So you have borrowers who had bad credit. That's why they got the loans with us. How did they ever get out of that subprime world and start getting good credit? Be able to refinance. Well, the argument was, since we weren't reporting good credit, we were trying to keep them at the subprime, so we kept churning them in the subprime rates. So we could make money. I meaning my former employer. Yeah. So it's so fair credit reporting was the subject of that lawsuit.
This is fabulous.
And so the Fair Credit Reporting Act is there to protect consumers and ensure that creditors are reporting accurately.
I don't know if you guys caught that, but I'm actually taken back by it.
I feel vindicated.
Oh my gosh,
it's like fantastic for people that have been. If you go online, you look in the internet, and you look at like what's real and what's not real. You're really opening up a lot of things and pointing to what's real.
No, it happens. So people should always pay close attention to their credit report. And there's a lot of identity theft too. That's another topic that we're not even talking about today. Sure. But you got to keep an eye on your credit report because people have access to this information easier than you think.
All right, so if you didn't catch that, I'm gonna repeat it because it's good. And this is probably secret number 4 or 5 by now. I've lost track. We've talked about so many good things, but Fair Credit Reporting Act, they have to report the good and the bad. it seems like they all report the bad, but in cases like this, from what Keefe just told us, this particular bank, not mentioned, wasn't reporting the good on purpose, so your score wouldn't get better. Allegedly not reporting the good. That's insane. I mean, that is a overall big decision that somebody had to make that I would just imagine, it has cost the consumer several millions of dollars. It's insane. I'm taken back by that, and I can't believe that happens. All right. Gosh, I have questions here that we're not even getting to because these stories are too good. I almost feel like I should just not even ask you guys questions, just let you guys talk and tell me the best of what you guys have heard. But you know what? That's exactly what I'm going to do. But before we do that, we're going to go to break. If you're listening right now, you're listening to Money Matters with Dino on KEIB AM1150. If you have any questions about your mortgage, which I can answer, or heck, your credit, since we're talking about this today, these two guys right here are absolutely a wealth of knowledge. And if they can't help you, I'm sure they can point you in the right direction. Give us a call at 949-720-1616. That's 949-720-1616. And I am positive that one of these two guys will be able to help you guys out. If you also like, you can catch the rest of the show on moneymatterswithdino.com. I'm sure we'll have it up by probably Monday morning, right, Phil? So we'll be back right after the break. Hang with us.